Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic end to your weekend. In today's video, we are going to be discussing what is going to be a massive week for cryptocurrency, as we have not only got two very important weekly closes occurring, one for the total cryptocurrency market cap and the other for Bitcoin, but of course, this upcoming week, in less than 4 days, we have got the interest rate data. Now, this is going to play a massive role in determining whether or not the rally we have seen for the S&P, the rally we have seen for Bitcoin is going to sustain, or whether or not we will see pullbacks. We are going to be going into massive detail, talking about the short-term pullback, the short-term expectations, targets, invalidations, and much more, as well as going over the weekly, short-term, daily, and monthly context. We'll also be taking a look at that interest rate data and discussing potential plans and potential expectations based on the various results we may see. Before we get into it, go ahead and smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. That is the first link down below in the description. You'll get access to our Telegram channel. We post charts, updates, analysis, educational posts, videos, and everything you need to stay loaded for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel. Contact our admin, check out our entire trading track record, or click this link to watch a 10-minute video inside the VIP channel and group chat. We'll show you absolutely everything, how it works, what you'll get access to, and you'll have a pretty good in-depth understanding of what there is and what it's all about. Go ahead and check it out. We'll love to see you in there. Let's jump into the video. So taking a look at the price action, guys, like we just mentioned, a big week is coming. Interest rates, weekly closes, short-term price action and volatility. A lot is going to happen, and this week is going to tell us, hopefully, a lot about what we should be expecting moving forward. So let's start on the market data. We'll come back to the analysis in today's video. 24-hour volume down 29%, liquidations up 6%, volume down, that is expected of course as we enter the weekend, volume does reduce. Liquidations at 148 million with 121 million in longs, pretty large amount over there with 27 million in short, so definitely skewed to the long side. Taking a look at the short-term price action, we can see we had a pretty good rally over here in the short term, actually coming very close to that $98,000 target we had ever since we broke out of 95.5. We were telling you 98,000 was going to be that expected target. We came about $130 shy of that. We can see from that point at which we created a bearish divergence. Okay, we had an uptrend in the price action which was broken. Upon breaking that uptrend, we lost a local low on the RSI, facilitating a correction back into 55.5. This is where those mass liquidations have occurred for long positions. Moving over to the DXY and the S&P 500, the DXY is still sitting underneath that 100 region. Not quite yet confirming this as deviation, but we are coming up to retest that change of character. So what result we get and how we see their future interest rate expectations develop as a consequence of that Jerome Powell Federal Reserve press conference will massively determine where the DXY is likely to move to. So we can't say for sure this is deviation yet. At the moment, it is a breakdown. Will this breakdown sustain? That is going to be dependent on what we see with the interest rate decisions. But if we're looking at this price action, we may potentially see deviation develop back into the 200. Now, if we do see that happen, we may see corrections across the board for the risk asset market. We'll discuss that in just 1 second. Let's go over to the S&P 500 first. So the S&P 500, as you know, broke out of that weekly downtrend. Fantastic stuff. Held above the 5,500 trigger point, and again, another fantastic thing. We are now approaching, and we have reached a new level, I'm not sure I say new level, but a major level of high time frame resistance at 5.7. Now, our 5.7 was once a level of resistance back in July 2024. We broke through that resistance, we retested it twice as support, and we continued to a new all-time high. We can see here we are now retesting again. So prior resistance becomes future support, which we saw. Future support, or should I say prior support, becomes future resistance, which we are currently retesting. If we are going to see any sort of correction for the S&P 500, any sort of reversal in what has been a strong uptrend, it is going to happen from this point here. This is the point of which we see a rejection, if a rejection is going to occur. So I'd be very cautious over here moving into interest rates, particularly if interest rates are on the corner and the S&P 500 at a major resistance. If we reject from here, these rejections could take us under 5,500 and take us back to 5,300. If we break through 5,700, we know the targets. 5,800, 6,000, and again, these prior highs, 6,200. So overall, a major macro trigger point sitting right here at 5,700, guys. Just like the total cryptocurrency market cap is at a major trigger point, which is 3 trillion, which if broken, we will see strong continuations upwards, but until then is acting as a major rejection or resistance point. That is the same thing that applies to 5,700 on the S&P 500. So as we now approach a major point of resistance, particularly with a major news event looming, we need to be a little bit more cautious about taking positions moving into this economic news. And that brings us to the news itself. In 3 days and 17 hours, we do have the interest rate data. At the moment, 97.2% in favor of a pause, 2.8% in favor of a interest rate reduction. The expectation, as we can see, is unequivocally in the favor of a pause, and it is likely already priced into the market. So if we do see a pause, it is unlikely to stir up any volatility in the market. If we do see an interest rate reduction, it is very likely to result in a very large rally in the market for the S&P 500 and for Bitcoin, okay? Now, since the interest rate data here is so much more in favor of a pause, it is unlikely we do see, of course, a reduction. So therefore, it is unlikely the news itself will have any sort of dramatic impact on the price action. What is going to have a dramatic impact on the price action is the Federal Reserve press conference. And if we see any sort of narrative shifts, particularly discussed around future interest rate decisions, if they talk more about the uncertainty around that, if they double down on the uncertainty, we may see actually the DXY rally, and we may see the risk asset market pull back. If they are more optimistic, if they talk about how it is looking better, the tariffs are clearing up, the uncertainty is fading, then it is likely the probabilities for future cuts will increase, and the market will price that in, rallying toward the upside. So as we can see just from there alone, we don't really know how that macro is going to respond until we have the interest rate data. And when we have that interest rate data, and we have that press conference, and we have the narrative which the Federal Reserve expects, the market will naturally gravitate towards the way of which the risk is in favor. So we need to wait to see how that develops. Nevertheless, guys, we'll jump into our analysis. Now, before we do, if you are interested in supporting the content and supporting yourself, sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll support me making this content for you, and of course, you'll be trading on exchanges I trust. Go ahead and check out the links down below to sign up. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's get back into it, starting on the total cryptocurrency market cap. Now, we discussed this in our most recent video and talked about why this is very important. And this total cryptocurrency market cap here is going to essentially represent the health of the entirety of the cryptocurrency market, right? It is Bitcoin, it is altcoins, there's absolutely everything. It's representing cryptocurrency as a whole. So when we're looking at the probabilities for Bitcoin to go higher, the probabilities for altcoins to go higher, but not looking at them as specific assets, but more of a general term, the cryptocurrency market cap is a good tool to use to get an overall assessment of the direction and the biases developing on the broader market itself. So if we're looking at where the total cryptocurrency market cap will need to break to facilitate a market-wide continuation, that is going to be the $3 trillion level. Now, the $3 trillion level is not only a prior level of historical significance, okay? It is a prior level of major resistance. In fact, it operates as a bit of a cluster of resistance. We can draw in up to around 3.1 trillion. It is the lowest point of that resistance zone. We'll go ahead and draw it in with a gray box really quickly to make it a little bit more visible. As we can see here, it is the lowest point of resistance in what is a larger resistance zone, which spans up to around 3.08. But of course, it is going to be a trigger point where, if broken, facilitates a macro continuation upwards. So until then, we are at a point of resistance. The broader cryptocurrency market, being that of Bitcoin now, and of course the altcoin market, is now approaching what we would consider a market-wide resistance, which is the $3 trillion level. Now, breaking through the $3 trillion level facilitates a move into the range high of this resistance, which we will know to then allow for a continuation upward, or at least give us a chance to see a continuation upward. So just as the S&P 500 is in a major macro resistance, the cryptocurrency market has seen a fantastic rally upwards over the last few weeks as a consequence of the 90-day tariff pause and the narrative shifting in favor of risk asset growth. But of course, now retesting a major level of resistance into interest rate data, we need to be a little more cautious on the short term moving into this interest rate event. So at the moment, guys, if we break through this resistance, that is when the cryptocurrency market over here, in terms of the total cryptocurrency market cap, will expect macro continuations upwards, very likely well into the mid $3 trillion level. However, that is going to still be a resistance until it is broken. But it doesn't mean rejections are bearish. This is where context is important. If we take a look at the price action, we broke out of a multi-week downtrend. Since the breakout of the multi-week downtrend, we have established, again, a break of a prior lower high. This is going to be a lower high. This is sitting at 2.8 to 2.84. The 2.8 to 2.84 trillion level is a horizontal level of support, which is acting as a bearish trigger. Just as our resistance is acting as a bullish trigger, the support is acting as a bearish trigger. A trigger simply being a point of price on a horizontal scale where, if broken, will dramatically change the probabilities in favor of a directional continuation in the direction of which the resistance or support was broken. If that didn't make any sense, if we break the support, the probabilities become massively in favor of a correction down. If we break the resistance, the probabilities become massively in favor of a directional continuation upwards. That is what we're saying. Until then, we are bullish, but we are moving into resistance. So if we start to see rejections develop, that is still okay, provided we sustain above 2.84 to 2.8. If we lose 2.8, it is very likely we will see a market-wide pullback for the cryptocurrency market, of course, for altcoins, and for the Bitcoin chart. If we break through 3 trillion, particularly 3.8 trillion, it is likely we see a macro continuation upward for altcoins, and the Bitcoin price action will likely push well above 100,000. So the key trigger point we're watching, really the only chart that matters right now, is going to be the total cryptocurrency market, because it's going to not only infer the potential probabilities for macro continuations of Bitcoin, but likely continuations and performance of the altcoin market as well. So let's dive into the altcoin market, and then we'll jump into the Bitcoin analysis. So looking at the altcoin market, we're going to take a look at this on the daily chart. Now, the altcoin market is not looking as good as the Bitcoin chart, and it is not looking as good as the total cryptocurrency market cap. Now remember, the total cryptocurrency market cap is derived from everything in the market, and Bitcoin is taking up essentially the vast majority in terms of market capitalization, around 69%, in terms of Bitcoin dominance. So of course it is going to be looking a little bit better than the altcoin market over here. The altcoin market still needs to break through one key level of resistance for it to start to look very healthy again. And that is going to be this prior lower high, 840 billion. This is the resistance, where if broken, will allow for a strong continuation to 940 to 920 billion for altcoin market. That is 15 to 30% returns for the majority of altcoins. Some will do better, some will do worse, but I think on average we will see 15 to 20% returns for the majority of altcoins if we see this level break. What does that mean for you? It means sometimes patience is worth it, okay? Sometimes waiting for confirmation is the insurance you pay to be right, and the percentage return you'll get will be at a great, or should I, at lower risk, waiting for these breakouts than not. That doesn't mean you can't take altcoin swings. You have to do what is suited to your own risk tolerance. There are some altcoins that look fantastic already, and we haven't seen this breakout yet. There are some that are massively underperforming and doing very bad. But it is very important to note, the altcoins that have performed very, very well will also see larger pullbacks if we see this fail to break through, okay? We see mean reversion upward, and we also see mean reversion downward. We have to keep that in mind. So taking a look at this, guys, for the altcoin market to perform exceptionally well, we need to see 840 billion break. And for us to see 840 billion break, we need to see the total market cap at least break through 3 trillion. So we can see how these two charts kind of correlate to each other and how the total market cap is going to be inferring the probabilities onto the altcoin market as well. Let's move over to Bitcoin, the short-term price action and the higher time frame price action. As we know, we have a weekly candle close occurring in 24 hours. Now, the weekly candle close from a structural perspective will be important, but from a directional perspective will be less important, as we know now the interest rate decision is going to more or less impinge on the direction of the risk asset market, regardless of where we see these candles close. But we're looking at from a structural perspective, a close above 93,700 will be of significance, as it will flip this level into a new level of support. Okay, and the more supports we build up below us, the greater the probability the trend will sustain. That is as simple as that. Okay, at least sustain at higher prices when pullbacks do occur. That is probably a better thing to say. Okay, let's start on the short term to come back to that in a second. It's looking pretty bad. Okay, it's looking pretty bad, and the reason I say that is because we have come up to retest 98,000. We know this is a level of resistance, and we have dropped from 98,000, but we have now retested, or we've come very close to, we are coming to retest this prior level of resistance. Prior resistance becomes future support. So provided Bitcoin is able to sustain above 95.5, we will see reversals and continuations upwards. If we drop below 95.5, and the level we're really watching is a 200 moving average, which will be coinciding with that level. If we lose that 200, we lose a support, it is possible we see a continuation back to these lows. Now we know already that a loss of the range low, again, the loss of these prior higher lows, okay, will result in a steeper correction, which could take us into 89,000. So this is going to unlikely develop until the interest rate news. The interest rate news could perpetuate this move to actually occur. But if we do see this move occur, I want you to be aware of the fact that 89,000 is a high time frame support, okay? And just as the total cryptocurrency market cap is more or less bullish above 2.83, Bitcoin is more or less bullish above 89. So provided 89 is able to hold a support, we could see corrections and continuations. If we lose 89,000, that is when we are then starting to expect steeper corrections all the way back down to sub 60,000 if we lose a 50 and lose the Gaussian channel upper band. So you can see how this week is going to be important. Of course, any week that has interest rate news is always important. There's never been a news release for interest rate data that hasn't been important for the risk asset market. It is literally one of the most fundamental drivers of risk asset movements, interest rate decisions, because it directly influences a variety of things. We can go, let's see if we got this flowchart. We can go into massive detail really quickly about, how many aspects of the economy these interest rate decisions really affect. But, to summarize it from a perspective of risk assets, right, we have interest rates affecting cost of goods and services, available household cash flow increases if interest rates fall, allows for more retail spending on assets, right? If interest rate falls, your household cash flow increases. You have, or should I say, available cash flow increases. Less money is going to short-term and long-term debt obligations, which frees up capital to invest. So people put money in the risk asset market. If we're looking at companies, debt to service ratios decrease. It makes their balance sheets look healthier. That frees up capital to then acquire more debt, and they use that debt to buy more income producing assets, and that income producing asset they leverage to acquire more debt to then purchase more assets, and the cycle goes on. So as interest rates get lower and lower and lower, we'll start to see this process become more and more in favor of asset prices, and it is not so much always in the reduction of the interest rates, but in the expectation of future reductions do we begin to see this cycle start. And that is exactly why we saw Bitcoin move from 20,000 up to 100,000, because from that point we saw interest rates plateau. And what we see after a plateau is an eventual reduction, or at least an expectation of future reductions. And that is why the market has been rallying in anticipation of future interest rate reductions for the most part. So while that narrative is still intact, and that is going to be the main driving force behind risk asset prices. Thanks for tuning in, guys. Have a fantastic day. We'll catch you in tomorrow's video. I look forward to seeing you all then, and I'll see you then. Bye.